We got to do a company here real quick, Chase, before the break. And I think first up, we're doing AutoZone. Is that what we want to do first? Was the
AutoZone.
Yeah, AutoZone was first on the list here. Let me get to AutoZone. Obviously, AutoZone's a auto parts company. Not much short on the float, 1.7%, 95% institutional owned. The P/E ratio, not a good start. It's at 29.1, above the industry at 24.5. Price of sales, 3.8, also expensive compared to the industry at 0.7. No price to book value, which means that their liabilities exceed their assets. Price of cash flow is expensive, 22.5 versus 8.2. And the PEG ratio does look good, 2.5. I say that because there's nothing for the industry. Now, the growth of AutoZone does look like, well, not very good. The earnings are down 1.3% over the past year. The industry was up 4.9. We do see sales climb by 2.2%, better than the decline of the industry of 3.2. The analysts do give this a 5-year earnings per share growth estimate of 12.3%, while the industry is a negative 4.8. Maybe that's why it's got such high valuations. Disappointed here. They don't pay a dividend. I thought they would. The balance sheet, current ratio, kind of light, 0.8 versus 1.9. We also do see here that my screen just kind of went crazy. Debt to equity, again, no equity, so therefore there's no debt to equity. We do see net profit margin 13.6 versus 3.2. That's a positive. Return on equity a negative 64.5. I guess they lost their equity. Something's happening there. I'll try to look at the balance sheet, see if we can see it. And then free cash flow is $2 billion versus $1.1 billion for the industry. So what do you got going for it? Because I'm not too excited about this right now, Chase.
No, I'm disappointed. I was hoping we had something, because especially when you look at, the average age of the car on the road now is about 12.8 years, which is a record. So I either think, number one, auto manufacturers are going to benefit because people need new cars, or number two, it's going to be these part companies, because those parts are going to mature faster than the cars. So you either have to service your vehicle or get a new vehicle, which, again, that should benefit AutoZone. But, yeah, I mean, the numbers not looking good. I'll give you some here. The current price, $4,215.08. I don't like that. It's very hard to say how large of a price that is. Sometimes I wish this is when a company would just do a stock split, because it's so complicated.
How much is the stock price?
$4,215.08. 52-week range, $2,980.10. And the high here, $4,388.11. The stock, it's been a good performer, though, I'll tell you that. Over the last 10 years, it's up 477%. Over the last 5 years, 257%. Over the last 1 year, 37%. Year to date, 31%. So, I mean, it's been doing very, very well. But the big concern is you go forward on this company, you go out to August 2027, I see estimated earnings per share here of $182.45. Gives us a target sell of $3,028.67. This company is trading at 23.3 times those future earnings.
And I think we could be onto something with the car parts, but AutoZone is just too expensive. I did look at their balance sheet. I can't find a reason why they have the negative equity, but I go back to 2022. It was like a negative $3.8 billion. As of now, it's about a negative $3.9 billion. So they've got more debt than they have assets. Probably, I didn't take that quick of a look at it.
I did see they had something with financing on there. Okay. Again, I can't tell how large of a weight that would be on the balance sheet, but I did see something about financing in the summary. In their summary, they got a lot of stuff. It's kind of reading through.
They're not a franchise on those stores. Do they own those stores?
I'm not sure.
That could be a difference there.
Yeah, it could be.
Yeah.
So maybe the stores, and then also, again, that financing could weigh negatively on it. But it seems, obviously, it's not worth the research, because that valuation is just a little bit too high for a company like that.
Yeah, the debt is up $2 billion from just a couple of years ago. So I'm not feeling good about this one. I think we got to find something else, because I like the concept, but AutoZone, too expensive, too much leverage.
Not in the right zone.
Not in the, ooh, good one. Okay.